Hey everyone, welcome to The Perfect Storm. This channel is dedicated to illustrating the concepts for trading which are available in the new book by the same name through sacredscience.com, also known as the Institute of Cosmological Economics. These techniques are based on mathematics, astrology, and astronomy. The techniques in this work illustrate concepts that are applicable to day trade and short-term swing trade, the S&P 500 market, using futures, options, or ETFs. In the first video, we're going to concentrate on the day trade portion of the book. I'm going to illustrate the concepts that when used together give powerful indications for winning day trade strategies that work on an everyday basis. These concepts are very consistent and work a high percentage of the time. This book will be available through the Institute of Cosmoeconomics. Here's the ICE webpage on the screen. You can go there and take a look. The site was formerly known as sacredscience.com, and the old link will still bring you to the new page. This book also comes with software developed by the authors that will allow the user to utilize the information described in the book with a minimal amount of work on their part. The authors will also be creating a traders chat room, which interested traders may subscribe to for a monthly fee. The authors will call trades out based on the concepts illustrated in the book. Follow this channel for updated information as to when this trading room will become available to the public. There are three primary astro tools in this book, and they will be shown individually, but when they are used together, they create a very powerful trading dynamic, hence the name, The Perfect Storm. The math tools that are in the book can be used for day trading or swing trading as they work on any time frame. I will describe the techniques with chart examples to give you an idea of what the information in this book can do. But let's start it off. We'll take a look at the math tools first, as these are very simple calculations, and an online calculator reference is even given in the book where the user can just plug in a couple numbers and get the desired output, which can then be applied to the charts. Moving to the astrological and astronomical tools, the first one that we're going to look at is Intraday Aspects. Many traders have looked into the use of intraday aspects already and have found that these are generally hit or miss and don't work enough to be used as a standalone trading system. In our work, we found what aspects will be active on every given day, and we explain how to find the correct aspects that will be working in the market today. The second tool we will look at is a concept called Astrodynes. Astrodynes were created many years ago, and they were initially made for a different purpose. We have taken the Astrodyne concept and applied it to the markets. It's a very useful tool that gives us a potential roadmap for the day in the form of a price curve and trend direction tool. This tool also gives us important turning point times and often will get us into the high or low of the day. Our third astro tool is based on the concepts from Vedic astrology. This tool gives us a primary, a secondary, and a minor trend indication. This is a planetary-based tool that is extremely effective, and when combined with the other tools, we get many great trading opportunities for entering and exiting trades every day. So let's go to the charts and start to check out these techniques. There are two primary math techniques that are given in the book. These are derived from similar to what Ganns spoke of in his Law of Vibration material. What we're doing here, we're taking wavelength and frequency, and we've come up with math that does price and time conversion. So what we're doing, this first chart that I have up here is a 4-minute S&P chart from May 11th of this year. And what you see here, there's a swing marked out with the dark blue or black trend line here from this first top. We're using that swing to create a time measurement. That particular swing, when using the math conversion for our wavelength tool, gives us 23 bars and 229 bars to point out forward into the future. So we can measure that from the beginning or end of the measured swing. When we take that from the beginning of that swing and we measure 23 bars over, that takes us to the double tap, setting up a really nice short opportunity. When we measure 23 bars from the swing low of our measured swing, we get this minor retracement high, which gives us another short opportunity marked by the red arrow. We can then project both measurements from the measured swing and go out 229 bars into the future from that high or low. And that particular measurement gives us two minor retracement lows in the uptrend, which are good entry opportunities to capitalize on that move. Now our calculation converts the swing to either price or time. So the prior chart of this swing gave you the time projections. Now this chart is showing you the price projection. So the measured swing marked by the trend line from that high to low gives us a price projection at 28.94.75. And you can see the low of the day came in and missed that projection by one tick. Now, taking a look at our second technique, we're going to use two market swings for this particular technique. We're going to use the swing down between 9 a.m. and 10:28 in the morning here, and the swing back up to where this vertical line is. These two swings are going to generate price, time, and angles that we can plot on the chart. We can come up with some really good angles, which we believe these are the true Gann angles, and these are based off the market data itself. You can see how these angles are excellent support, resistance, and trade triggering tools. This is a very simple yet very important mathematical technique that gives us price, time, and angle projections. This next chart, we're going to take the two vectors marked out by the orange trend lines here, vector A and vector B. We take measurements from those two vectors and we make a price projection for the downtrend move that ensues off of this double tap. You can see we have a projection at 27.58 1/4. The actual low was 27.60 1/4. So our price projection missed by 2 points. Now this price projection was made on the 12th. Our measurement ended at 9:36 on the 12th, and the price went down and approached that low on the 14th. So you can see we were able to project this price within 2 points. It didn't come till 2 days later. Now on this last chart showing the technique, we're going to use one swing marked by the blue trend line. And what this is going to do, this is a variation of the method, and this is going to allow us to make two projections. So we've got the two projections in time moving forward. So the blue swing marked, or the swing marked by the blue trend line, gives us two projections which are marked by the orange trend lines, which give us these two lows marked by the trend line and the orange arrows, which are both retracement lows in the uptrend, and give us two really nice points to get into that swing on the upside. Now these next two charts, this is a variation on Ganns Law of Vibration, and this uses natural frequency numbers that are involved in our universe. Once you discover these numbers give important projections that will mark out minor turning points on the intraday chart. Now what we're doing, we're taking this static cycle number, and the orange trend lines we start measuring from highs or lows, and we project that time count forward. So the trend line marks where we start the time count, and the trend line ends right at our projection. You can see from the 9 projections on this chart, only one of them failed, and the last projection hasn't been met yet, but will be met a little bit later in time here on this chart. And this was done on May 14th. But you can see, taking these measurements, measuring from this high gives us this minor swing low. This high gives us this swing high here. Coming from this high gives us a minor swing high here. This low gets us a swing low there. This low gets us a minor swing high here. You see, every one of these was a decent turning point on the intraday chart. On this chart, we do a little bit of a twist, and now what we're doing, we're taking that frequency and we're turning that frequency into a ratio. And what we're going to do, we're going to take the time measured in bars on the swings marked by the orange trend line and multiply the number of bars times the frequency ratio, and that's going to give us a projection, which is the orange arrow. So the first swing up off the low projects to this orange arrow, which gives us this high. Measuring the second swing up, marked by the second orange trend line, gives us a projection over here to the second arrow, which is this minor low. The third swing up gives us a projection to this high, marked by this arrow. And then the last swing up to this high projects and gives us this low over here. So you can see that these price and time projections are very accurate and effective and give some really good trade entry or exit points. Okay, that's it for the math techniques. Let's move to the astro techniques. And the first one we're going to look at here, I'm going to show one chart on the planetary aspects. What we do, we are supplying an aspect software which will allow you to create these aspects on a daily basis for yourself, and you can plot arrows on your charts when these turn times are going to come in. So you can see the blue and the red arrows mark the aspect times that we had on this particular day. And you can see every one of these aspect times caught a significant swing in the market. Yet these aspects are based on the fast movers to the planets, but you have to know what the correct planets are to get the aspects that are active on that day. Moving to our next technique, we're going to take a look at the Astrodynes. What happens here with the Astrodyne, we have a software which will be provided with the book, and what this software does, it creates this graph, which is the top part of the screen here. You can see the orange line is the graph, and this gives us a price curve and turn time indications for the day. Now, the red vertical lines on the top chart are matched up by the red vertical lines on the bottom chart, which is the actual price chart of the E-mini ES. So you can see that the low of the orange curve on red line number 1 is this minor low on the price chart at red line number 1. And that gives us a low and puts us into a long trade, which is good for a 30-point move right there. Number 2, we get a high point. Number 3 is a low. We get a low at number 3 in the market. At number 4, we get a high. We get a price high in the market. You see this other minor high that's not marked is this minor high on the bottom chart. We go to number 5. Number 5 is a low. Number 5 is also a low on the price chart. At number 6, we get a low, which comes in at just a minor low on the price chart. Number 7 is a failure. It's the only failure of the 10 swings. Number 8 is a low point, gives us a low on the price chart. Number 9 is a high point. That gives us a minor high on the price chart. And number 10 is a low, which is also a low on the price chart. This is the concept of Astrodynes. This gives us a price forecast curve and also important turn times during the day. Does it always work this well? No, realistically it does not, but it's very effective. And sometimes the graph inverts, but we know where it inverts, and that's all explained in the book. So you will know when the price may invert, and if it does, you can follow it fairly easy in the proper direction. And last, but certainly not least, is our favorite tool. This is the the Vedic part of the equation. We can create time blocks every day where we can expect highs or lows to take place within those time blocks. On this particular day, you can see that we expected a low between 3:36 and 4:52 a.m. marked out by the two vertical lines. Put a square in here with the square tool, and where you see we get this low of the day with off this little double bottom in that time zone. Then later, at the beginning of the next day, right after midnight here, we had another time block from 2308 to 0056, and in that time block we got the a new high. So not only can we project trends, we can project time blocks where highs and lows are going to take place, and these are very, very accurate. Now here on this last chart that I'm going to show is our trend projections. And if you recall at the beginning of the video, I mentioned that we had a primary, a secondary, and a minor trend. I'm only showing the primary trend and the secondary trend on this chart. I'm not integrating the minor trend right here just to keep it a little bit more simple. The major trend is marked out in gray up here, and that major trend at this particular point on this chart is neutral. So the secondary trend is going to be the dominant trend. So as you can see, gray is neutral, green is bullish, red is bearish. You can see that at the beginning of the chart section, we have a neutral trend and we get a big down move and a move back up. When we hit the two bullish zones, we get a nice solid move up. Right at the exact time we switch to the bearish zone, we get the second part of a double top and we get a nice clean down move all the way through that zone. We then switch back to a bullish zone here on the 21st, and that gives us a nice swing up. And then within 12 minutes after we switch zones from bullish to bearish, we make a high, and then we have a downtrend throughout the rest of that zone. The zone here marked by blue can go either way. That could either be, it's generally bullish, but it can also be trend continuation. So in this case, it was bullish, and it's all the way up to the end of that zone. Now we come into this area that I have marked in brown, and we have this area. This is very similar to the last chart. In this area, we will expect a new high or a new low. So we were expecting a down move in this particular zone. So we are expecting a low to form here, which is exactly what happens. And then after the low comes in, we start to move up. And then when we hit the bullish zone, the upward trend continues. So that is the extent of our day trade tools. On the next video, I'm going to come back and show the swing trade timing tools. So thank you for watching. Stay tuned for further videos. Please subscribe, like, and share this channel with your trader friends, and bring them over so they can see what's going on here. See you next time.